How's it going, guys? In this video I'm going to be going over advanced market formations. This is part 2, and also I'm going to be combining following a trend 2.0 in the same video. So I'm on the Euro USD 60-minute chart. The reason we're using the 60-minute chart is because for these market formations you can see them a lot easier on the 60-minute chart. You can identify them on 4-hour chart and all that, but when you're looking for entries, sometimes you got to go to a lower time frame so you can get a little bit earlier entry, waiting for the 4-hour close. But let's get right into it. Euro, once again, 1-hour chart. This is recent price action, so we're going to follow the trend and see if we can basically figure out the movement of the market. It's going to be very simple. You're going to see. We're going to have some fun. Watch this. All right, so we're going to measure our first movement in the market, up move, pull back. Right. So let's measure it and let's see if we see a formation. Like I said in the video before this, there's going to be a wedge formation in this one. Okay, so we have a 786 tap. There's nothing special about that 786 tap. Let's get our Fibonacci extension in here, so we can project where remember we're going with the flow of the market. Okay, this one's going to be a 1414. Take out the 127. Okay, remember we're using the 127 and the 1618. All right, for target 1, 127, target 2, 1618. This one fell short a little bit, so it only hit the 1414 and never hit the 1618. Take off this. Boom. Okay, so we have an up move, and then we have the pullback, and that's where we're going to find that formation in there, the wedge formation, right? And then we have a takeoff right here, and 4 bounce. Okay, so this formation is what I'm telling you to look out for. All right, so tying back to the video before this, let's draw a counter trend line, 1, 2, run it through. One, two, run it through. All right, so we see that wedge type formation. Right, some people call it a flagpole, a flag, whatever. This or the formation I'm telling you guys to watch out for, especially when you're looking at the Fibonacci numbers it's rejecting off of. So you notice how it came off the 786 and it made that wedge formation. That's a beautiful sign. Once it breaks through, you can look to go long, target the 127 and the 1618. Obviously it fell short of the 1618, but it's going to hit it right here. But we get a pullback, so we're going to reset our market flow. All right, see what type of formation we see in here. So once again, we're going to start measuring from low to high. So from this, remember this new low up to this new high. Remember market flow, market flow. All right, it's going to be a 618. It got close enough, so I'm going to see how close it is. So I'm going to count it as a 618 tap. And then we get the extension. So let me actually do the extension. So remember from this, the extensions, I'm doing the fluid extensions from following a trend video. If you're confused on what I'm doing right now, go on following a trend video and you'll see what I'm doing. The one I go over Euro pound. Okay, so it's going to be a 127. See that how it the market consolidated. That's our first target. Remember, for our trend, when we're going off these Fibonacci's, first target is the 127, second target is the 1618. So look, we're just getting the market. We're just getting very smooth market movement right now. Right, we have an uptrend. We're just getting nice pullbacks. Notice the Fibonacci's are hitting. Okay, 618. Okay, let's see what formation we got here. Let's see, we have a higher low, higher low. So I can do a trend line right here. 1, 2, run it through. Another trend line right here. We got like a triangle type structure, like I said. Let me enable the 38.2. And boom, like I said, remember the 38.2, you're going to see those triangle type structures set up. And look, once we got the breakthrough, we get the trend continuation. Okay. So we're getting lower highs and higher lows right here, and then we finally get the pop. For entries on this, try to catch that trend continuation. This trade was kind of hard because look, you have a really big shift in only an hour. So if you weren't in before that, you could have gotten in right here, but obviously your take profit's gonna be right there. So it would have hit, but it would have been nice to get in here. So you would have to look for entries. And it's bouncing off to 618. It's making higher lows, making lower highs. You know it's gonna pop to the upside. You're here in an uptrend. Okay. So moving on, we hit the 127. Let's follow this trend. Start again. Fibonacci low to high, low to the high. Okay, we got a 38.2 near miss. In this situation, I wouldn't have taken the trade because I like to see a deeper retracement, but it's very, very close to that 38.2, so we can count it. You see the market's not a textbook. Everything in the market's unique, so let's see. We're going to pull back right here. 38.2. Oh, before I put the arrow, let's see what type of structure we get here. Put a horizontal line right here. Boom. Whoops. Okay, so we see price bottom out right here. See at this low that it's set, even though price spiked through, it always kept closing above this initial low. And these previous lows were not broken, still in an uptrend, upside down hammer, entry. Boom. Let's project where we're gonna go off. Okay, so overall move. Looks like this retracement. Okay, this is a double bottom. Okay, so this is a double bottom at the 38.2 near miss. Let me enable the 23.6, which I don't use often. But when I see these super shallow retracements, you gotta put it on there. Boom. Okay, that 23.6. Notice what price did. Double bottom, and then it took off, broke the high. Okay, so let me adjust this arrow. Just take you step by step, basically how I follow a trend. No special effects here, guys. Straight up market structure, just basic market knowledge. Takes off. Okay, so let's do our overall move. It looks like a 113, possibly. Okay, so we're doing the Fibonacci extension once again from this low, bring it on up, bring it back down. Right now, enable the. Okay, it looks like we got a near 127 miss, but let me throw in that 113 on there. 113, boom. Yeah, see 113, 127 did not get met, so. As it rolled over back down, you would have to see that it did not break this low. Okay, so you see this structure low right here. This is going to be our new, basically our how do you say, our clue. If price breaks this low, then we know we're probably going to go into a downtrend, right? So this new higher low right here, right, that it's set. This is new structure low. Okay, on the uptrend, this is a new higher low structure. Okay, so I know if it doesn't break this, we're still good. And then boom, it didn't break it. And it started climbing back up. That's perfect. Okay, so let's measure. Once again, let me zoom in on this one. So let me measure right here from this low up to this high. Alright, that peak high. Alright, oof, that's beautiful. Look at that 618 tap. I mean, guys, you can't make this up. Okay. So what type of structure, what type of market formation are we getting right here? Do our trend line, our counter trend line, boom, this low, 1, 2 running through, boom. What is that? It's a wedge type, flag type pattern, right? All right, and where's the entry? When it's about to break or when it breaks, you get an entry there. Okay, these big candles usually get retraced, so you can always wait a little bit for a pullback and then get in. Okay, but then boom, price takes off. That's target price, overall move. Fibonacci Extension, low to high, run it through. Just taking you guys step by step, basically my process of how I'm looking at the market. 127 hit. Let's take off the 113. Let's put the 1618. Okay, so we know 127 got hit. Let's see if it climbs up. Boom, hit the 1618. Okay, we would have been out for sure. And then look, price is already making a bearish candle, so we're going to have to be very, very careful right here. It's probably going to start dropping. So let's just run the market slowly through. Boom. See that candle right there? Alright, so it looks like we're getting a nice pullback. Hit the 1618. Looks like we already exhausted the trend, so let's actually run back through. Okay, and let's add in our arrows to what we missed. Boom. Right here. Alright, notice this pullback made the wedge formation. Like I said, hit the 786. Told you guys. Right here, we got another wedge type formation. And we got that double bottom right here. This one was like a symmetrical triangle type. Okay. So notice when you're following the trend, you're just looking for these structures, okay, to go with the trend. Okay, 1618. It's going to be my extension here. I know no one uses this extension, 1.786, but it looks like it touched that one. You got near it. We'll take that one off. We'll just use the standard ones. 1618 and boom. Okay. Looks like price is already exhausted, so it's taking a little breather. Okay, but this is an uptrend, guys. Okay, very simple. There's many trading opportunities. There's one right here on this double bottom, right here on this hammer, right on this 1 hour chart. Right, let's see on the 4 hour chart. There's going to be opportunities right here, reversal patterns and stuff like that. But yeah, I mean, it's very simple when I'm following a trend. It's just, I'm just waiting for the pullbacks, waiting for some type of formation, okay, and waiting for one of those fibs to hit 618, 786, 382, okay. Especially, I love seeing this, like an obvious up move and then a slide, like a slow slide down, and then they hit a fib and then they take off. Boom. Okay, and then I'll just aim for that 127. Simple. Simple. Okay, so then look, price already broke a previous structured low, a higher low structure. So looks like we're trending downwards, but that's based off the weekly charts. That's why it's trending down, but we might get an uptrend. I'll show you right now. Let me go on the 4 hour. See, I don't have quarter points or nothing on here, but look, watch. See how nice it looks on the 4 hour chart. Check out that trend. It's beautiful, right? Okay, so this is where we're at right now. Okay, so you see this large down move. I'm just going to see what retracement we're going to hit. And we're going to break through them. Alright, so I'll take off the 23.6 because I don't use that one that often. Okay, there's some bigger picture stuff going on. Like I would have to zoom out. I would have to get on the daily chart to actually show you guys. There's some bigger picture stuff going on. If price doesn't immediately start breaking to the downside, and break this low, we're going to see big upside all the way till probably around the 111.5s or so, 111s. I have to look at my other markup. Probably switch to that one right now so I can show you guys. Let me see if I can switch over to it. Yeah. So, yeah, there's some bigger picture stuff going on, but it's just I have all these patterns ready for it to go to continue bullish, obviously, but just going off the weekly chart, I just don't like the way it looks. If you're going off the weekly chart, you have a very strong bearish candle, and then it rejected off these highs right here. You see how it just broke that high, and then it came back down. So it just stopped out anybody, and then we have a large bearish candle right here, closed below the quarter point. So either this week is not going to be that much movement, and then the next week we take off, or this week is going to keep dropping. You know what I mean? Like by the end of the week, keep dropping. But it's kind of tricky right now. It's kind of tricky because of that weekly candle, you know what I mean? But it might just be a pullback, you never know. So we're going to have to see if these patterns complete. Oh man, we're going to look to short right around the 112s, right? We're going to look to short around these areas. Right here we got two patterns completing right here. So an ideal would be just to tap to this 1618 right here of this deep bearish crab, I think. Yeah, actually, yeah, it was a deep bearish crab, 1618 extension. And then this a shark right here, and we have the 88.6 right here, lining up. So an ideal entry, if price did spike up to this area and eventually hit it, would be 112.056. So that would be an ideal entry. The thing is, the quarter point's right there, so I know they're going to want to reach up there. At least just tap that area and then drop. Okay, but that's only if this high breaks. All right, so this, I mean, there's so much stuff on my chart. Let me go to the 4-hour chart. So this high would have to break right here at 109.055. That high would have to break, and then these patterns could possibly be valid. Okay, but it's looking bad on a weekly chart, so we're gonna have to see what happens. Always base your analysis on the higher time frame. So you know, it's pretty simple. I don't really like the way this pair is looking, so I would probably not be trading it right now. Unless I see some really nice, like a weekly big bullish candle on the weekly chart, then I would take it to the upside. Or maybe on the daily chart, if I start seeing some really big up moves, then I'll be like, okay, it looks like we're going to complete these big patterns, right? And then once these patterns complete, once again, I'll look to go short. I mean, it's very simple, guys. I mean, I just start combining everything, like everything I use, like look these quarter points. Okay, I look for trades off of them. It's very simple. Once one breaks, it's going to try to go to the next one. Okay, and if they chill there and start making a formation, once again, advanced market formations, like right here, like a little head and shoulders. Okay, let me zoom in on that one. So this is a little bit more, even more advanced, because it's above the quarter point, 1075, and then it made a head and shoulders on the 4-hour. All right, and then it came back down into the quarter point zone, and then we were looking to go short. Okay, especially when it broke this low right here, retraced, hit the quarter point. That's a beautiful entry right there to go short. All right, and then you would just ride it to this next quarter point zone. All right, and these are 250 pip increments. Okay, but we'll go into that in the advanced quarter point video. Okay, but this is just following the trend, guys. I guess you can say following the trend part 2, advanced market formations. Remember, the wedge formations always going to be, you're going to be looking for them on the pullbacks, right? Especially when you see those Fibonacci's hit. Okay, and then just project, and then just as soon as you see rejection off that, and you see those market formations complete, you're taking the trade, just look for that 127 to get hit. Okay, as your first target, and then the 1618 second target. Very simple, very, very simple stuff. All right, and then eventually, as you follow the market, it's going to get exhausted, and then you're going to notice that structure is going to break, and then you can take it to the other side. Okay, very simple, very, very simple stuff. All right, I haven't even added in a trend line in here, really. But yeah, very simple stuff, guys. Okay, so probably next video, probably gonna cover. I mean, there's a lot to cover, but I don't know. I'll see what I come up with, guys. I mean, I'm telling you guys pretty much everything I use. It's very simplified, very simple system. Basically, looking for market formations, double tops, triple tops, all those type of structures. And I look for them on Fibonacci levels, okay, or at harmonic completions, okay, and then I look to basically take it with the trend, okay. So let's say this trend, see how this trend broke up right here? It broke a lower high right here. That's how I know it's trending upwards, even though it pulled back, did not break the 786, and it did not break this quarter point. Boom, zone. So we're going into an uptrend. Boom, it breaks it again, breaks the high, looking for that retracement. Boom, I'm gonna start getting in here. All right, I get in on the pullbacks. I don't get in while it's moving. Okay, I try to get in on the pullbacks. Okay, of the trend. All right, I figure out my trend. I wait for a pullback, and then I look for it look for an entry based off of a market formation and a fib level. Add in a quarter point, add in whatever. You can add in more confluences, RSI, ADX. There's tons of stuff you can use, but I keep it very simple. I don't use any indicators. I can use them. I know how to use most of them. Really good. They just complicate stuff. It's just another step, basically, to my process. I try to keep my process very simple. Okay, the next video I'm going to be going over the process, basically, of finding an entry. Basically, my steps. Okay, so you can have a list of following it. Okay, so next video, steps for finding an entry. All right, peace.